This is an India-focused fund for India, for Bharat, right? And so I'm personally very, very excited. In fact, everyone at 100X, Sanjay, Ninad, Yagnesh, Vatsal, myself, we are firm believers that the story for the next decade or even the next century is in India.
Hey everyone, this is Prashant and I'll be your host for the VC 10X podcast. And today we have Shashank Randev with us. Shashank is a co founder of 100X.VC, India's first venture fund to invest in early stage startups via iSAFE notes. In this episode, we talk about Shashank's story and how he started investing, targeting to invest in 100 companies every year, investment thesis at 100x VC, why India is the next big thing, what are iSafe notes, who can apply for funding from 100x VC, exciting portfolio companies, and lots more. So without wasting any time, let's dive straight in. Hey Shashank, so good to have you on the VC 10x podcast. How are you doing?
Hey, Prashant, thanks for having me and looking forward to our conversation.
Pleasure hosting you. So, 100x VC has been mentioned quite a few times on the podcast previously. We hosted Harshil Mehta previously on the podcast, and he was also mentioning how 100x VC like basically nurtures these really high quality startups, and that makes like really good quality deal flow for them that they invest in. So excited to have you here to talk more about what you do with 100x VC. But to start things off, can we have your story and how you started investing?
Sure. Yeah. So started my journey sometime in 2004, right after my engineering, and worked with a few companies on the corporate side, but then ended up doing my MBA. And post MBA, I think in 2009, I had a great opportunity to become the founding member for a startup, which happened to be building a product for the venture capital and private equity space and sector. And I was very fortunate to be pitching that product, building that product, which was a SaaS platform of companies very much like Traxin back in those days, called VCC Edge, which was being used by the venture capital and private equity industry. And I think that was that decade, that year, and the few years which followed were the formative years for the Indian investment ecosystem, which gave me deep insights into what was happening, because I was meeting these funds day in and day out, built strong relationships with them over the next 7 years, and then again was very fortunate to see that startup be acquired by News Corporation. So saw that piece of the journey, and then because I'd spent so much time building out this product with my team, and having interacted with the whole VC ecosystem and seeing so many deals happen, I obviously wanted to enter the ecosystem, and again was very fortunate once again to land an opportunity with a news fund which was setting up shop in India. It was an accelerator model, and we incubated 70 companies and invested in 16. I moved out in 2016 and I started doing angel investments, but obviously wanted to set up a fund, and bumped into Sanjay, who was a mentor and an acquaintance for the last 10 years during my VC circle days. And he had this vision, which I completely resonated with. He said, do you want to set this up and come on board? And again, I was fortunate enough to get that opportunity, and that's how 100x started in 2019, where Sanjay, Ninad Karpe, Yagnesh Sangrachka, myself, and Vatsal, we all came together to invest in very early stage companies, because from a vantage point we realized that that was the missing opportunity, where a discovery fund can come in and invest in 100 companies a year, and become the de facto discovery fund for any type of follow-on investor, be it angel networks, venture capital funds, so on and so forth.
Absolutely, yeah, and that's very interesting. Investing in super early stage companies, and I believe that's when the companies actually also need the most amount of support and help. And like capital is maybe not the highest priority thing that they need right now. More of what they need is mentorship and someone that can help them get to a stage where they can maybe raise more capital, right? And I believe 100x is doing exactly that. So can you give us more insight into how the 100x accelerator actually operates, that taking in people, and then
Sure.
what process do they actually go through
Sure.
that makes them good companies?
Sure. Yeah. So I mean, see, we are a fund at the end of the day, and the objective is to invest in a large set of companies. Now, you call it an accelerator model, or you call it a incubation model, or you just call it a fund. And I think we believe that we are a fund which is just doing a large set of companies, and as a function of that, we are piecemealing and managing these companies in a certain format, and hence the class format or a batch format. So what we do is, when we started the fund, we wanted to deploy capital in one go in a large set of companies. That was the first objective, right? So we identified 20 investable opportunities after speaking with founders from a pool of 4,000 applications. And then once we decided that these are the companies we want to work with, the first step was to deploy capital and give them the money, post the due diligence and all of that, uh, you know uh, pulling it down from identification of the company to investing in the company, bringing it down to a 20-day process, right? And investing in the first set of companies all at one go. So that was first step number one. And then obviously the point comes in where you, as a VC, as an early stage fund, as a micro VC, want to manage your portfolio company. And that's when we get down, put our heads down with the founders and start working on them. And those could be various nuanced approaches, because these are very early stage companies. These are companies where typically growth stage VCs are not coming in. How do you make them grow for a growth stage VC, right? So it's a lot more around how do you sharpen the product, how do you sharpen their GTM, how do you get them clients and get them business and create that stickiness around that product, so that when you're getting them ready to pitch to other investors at our VC pitch day, they're ready to raise money. So we typically, when we invest in a company, from there on to 90 to 120 days is when we are going to announce them at the VC pitch day. So essentially, we have 90 to 120 days before that to kind of sharpen their product, sharpen their GTM strategy, right? And once they are announced at the VC pitch day, on an average, our portfolio companies end up raising 450K to 500K USD. But the journey continues, right? We then manage them and help them stitch the round, close that money, but also ensure that we are working as a partner for them, continuing their product enhancement, continuing their GTM strategy. And that all of this happens through a bunch of master classes before the VC pitch day. Not only is 100X team, be it Sanjay, Ninad, Yagnesh, myself, Vatsal, and the entire analyst team working with these founders, we also have external folks, advisors, seasoned entrepreneurs, and investors who come in, speak with these founders, give them practical insights. All of the process is largely driven from generating practical inputs to developing practical outputs, so that the company is able to move from a seed to a Series A and Series B. That's the vision, and that's how we design it, right? That's all. So the idea is, we've done seven. Uh, we started with a check size of 25 lakhs. We've done 80 investments with that check size. Those 80 companies ended up raising roughly around 62 million USD at the VC pitch days. 70% of that came through VCs, which included Sequoia, Chirate, and 25% came through angels, angel networks, family offices. And then we also became confident as a fund, right? So we then increased our check size to 1.25 crores, which roughly amounts to 160K USD. And today we stand at a portfolio size of 105, with a total capital deployed of 50, a little higher than 50 odd crores. And while we are at 105 in 3 years, the idea is, can we do 100 a year? Um, and that's what we're trying to do. We are in the midst of closing a class 09, which should have another set of 20 odd companies, and we'll announce them sometime in May. And then again, back to class 10, class 11. And the idea is to build a large portfolio of 500 odd companies over the next 2-3 years.
Yeah, that's incredible. And while you're investing in these companies or backing these companies, I believe you must be receiving a lot of applications, and they are at like super early stages where it's not the VC kind of pitch isn't solidified
Right,
yet, right?
right.
So, on what basis do you evaluate like should we take them in this program or not?
Sure. No, that's a great question, Prashant, and thanks for asking that. I think one of the most important things which we do at this stage is to identify uh, what value we can create for that particular company, right? And before we get into that, there are five parameters which we need to cover, right? One is founders' backgrounds and founders' complementary skill sets, right? And I think that is more of a gut and psychological and just human thing to get to know the founder and the pulse of the founder. And we spend a lot of time engaging and speaking with the founder. Then we move obviously to the vision or to the total addressable opportunity which they are working towards, right? How big is that opportunity? Can it grow? Can it be an addressable business opportunity over the next 10 years? Can this be a sizable business, with significant dent in the universe, so to speak? Third point is business model, right? Is the business model scalable, right? Is it incremental? Can it be exponential, right? And the fourth point is there a moat in the business, right? And moat can be determined through various aspects, right? We are very sector agnostic, so we've invested in deep tech on one side of the spectrum. We've invested in D2C brands. Now, in a deep tech, the moat can be the IP, but in a D2C brand, let's say with Kerala Banana Chips, which is our portfolio company, uh, there is no how do you determine the moat? A lot of people ask us, right? And the moat is execution, right? The ability to create a stickiness brand, A, create a good product, and B, it being consumed, right? So we identify the moat or IP relevant to that particular sector and that business. And then fifth, obviously, is as I said, what value can we bring onto the table, and looking for a bare minimum 20 to 30x return on that company, right? So these are the broad parameters we look at. And obviously when you do this day in and day out, Sanjay's already built a portfolio of 150 plus companies, has had 4 unicorns, Oyo, Block One, CoinDCX before that. So his learnings plus the new investments we've done, 105 from 100x, I think the very fact that we engage with so many founders, seasoned and freshers, there's a pattern recognition which happens beyond a point, right? So, but all of this combined with these 5 points, I think, is the determining process and the investment thesis at 100X.VC.
Absolutely, that's very interesting. And I've learned that the way you invest in these companies is through safe notes, or
Correct,
the way you call it, iSafe notes, right?
correct.
So, can you give our audience a view of how are these safe notes structured, and what do they really mean in layman terms?
Sure. Yeah, so I think when we were starting out, we realized that the challenge was that most of these early stage companies were not getting funding because they were very early. They still needed a product market fit, so to speak, or a minimal viable product, right? And the second challenge was that even if they were able to secure funding from some angel or an entity, they were asked to do a shareholders round, right? Which is very difficult to determine, right, in terms of valuation at a very early stage, right? Plus the cost and the time spent in closing that transaction on an SHA, which requires legal cost and just the duration of getting the shares allocated and determining the valuation. So we didn't want to do that. We realized that SAFE is an instrument which has been used in the US. So we formulated the Indian version of it, which is a condensed version of a compulsory convertible preference share, a 5-pager document which we made open source on our website, and it's available for any founder to download, view, and utilize. If they're not raising from 100x, they can utilize it to raise from other investors. And the 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 reason for that instrument, and we are the only fund which is doing all our investments through iSafe, is because we fundamentally believe that at this stage, at the bottom of the pyramid, founders are coming up with ideas and building problems and building products which cannot be valued right now. They have to create the stickiness, right? But does that mean that they don't require money? They do, right? So iSafe is an instrument which enables taking the money right now and diluting your equity at a future time. So not only do you save on not assigning a valuation, more importantly, you save on the time of getting the money into the bank account, and not going through the SHA process or the legal cost around it. So it's founder friendly, it's quick, you can close a transaction very soon. Most importantly, that money which is received very soon can be utilized very quickly to build your vision sooner than later.
Absolutely, yeah, and that's a great format that you've built it in, kind of also de-risking the investment on your end as well, because it's so early in the journey that a lot of them will still not succeed, right? But you also have the upside that if they succeed, right? And like, if you could give us a view on the from the insights, like how does the program look like from the inside, how is it structured, and what can founders really gain to expect to gain if they are selected in the program, uh,
Sure.
and like a more view on that, so that our founders have a view
So
what
as
they
I
can
said,
expect.
it's yeah. So as I said, it's we don't run it like a program per se, right? We identify a set of companies. We then decide that these are the set of 10 or 20 companies we want to invest in. The step one is we call them, we do an investment committee. If the investment committee decides that we want to go ahead and invest in it, from there on 15 days, we close the transaction, and the first step is to give the money, right? Now, these companies are spread across, India, Maharashtra, Delhi, Bombay, Chennai, Coimbatore, Indore, and we don't ask anybody to come to office in to Bombay, right? They've received the money. We start building, and we start. If they're based in Bombay, we'll meet up with them. If they're not based in Bombay, we'll have a process of kind of understanding their product, getting into product calls, getting into GTM calls, so on and so forth. 3 weeks prior to the VC pitch day is when we are announcing the companies, is when we ask the founders to come down to our office. So all founders assemble in Bombay for 3 weeks, where we then are spending 100 plus man hours between the 100x team with these founders, talking on strategy, GTM, product development, product enhancements, so on and so forth. And while that is happening, as I mentioned earlier during the conversation, we then also bring in external folks, be it the likes of Nitesh Mithusin from Nazara, or people, just generally who've built out unicorns and businesses, and getting them to speak and interact with these founders to get practical insights into what they're building on, right? Um, and then we announce these companies at the VC pitch day, and the next step is helping them build a larger round, stitch a larger round, and then continue this journey. We all the 105 companies we've invested in, we work very very closely with them, because we've still not taken a single exit in any of our portfolio companies. 10% of our portfolio have already gone to Series A, and we have the same level of engagement with those Series A companies as we do with the latest company from class 08, which is the latest cohort.
Yep, that's very interesting. Thanks for sharing that. And would you like to share some of the exciting portfolio companies that have been part of the program? I know you mentioned a few in the conversation up until now, but can you give us a few more?
Yeah, so 105 companies, all of them are favorites. I mentioned 10% of our portfolio has gone to Series A. I think one is Smiles.ai. Uh, we invested in them in September of 2019, and in March 2022, they ended up raising a Series A of 23 million. We've got Data Sutram, we've got Blue Learn, which recently raised capital from Lightspeed and Elevation, um, and we've got Vitra.ai, which is converting any video into 52. Back then it was 52 languages. Now it's I think 200 plus, in converting the video into that language with the right dialect, right? So a lot of dubbing use cases in media and tech, and so many. And Kerala Banana Chips, a portfolio brand company. Um, Manas is doing exceptionally and phenomenally well. Mind Peers, which recently got showcased on Shark Tank along with Broomies, a whole lot of them. So very, very sector agnostic. We have a wide array of portfolio in SaaS, in deep technology, consumer tech, D2C, um, health tech, fintech. From our class 01 Pocketly, which is the rockstar company, doing amazingly well, and we've got Pension Box, which is again in fintech, and then health tech. We've got Swasthya.ai, to renal project from class 01. So very very diverse set of portfolio. And Prashant, the whole objective of keeping the sector agnostic and diverse is that can we help a healthcare company reach a optimum point so that a healthcare investor can identify them, and similarly a deep tech company, which can we nurture them and through our investment and network, so that they can achieve a certain metric to be identified by a deep tech investor, like in the case of Vitra.ai, which got funded by a deep tech fund called Inflexer, right? So very diverse set, and I'm hoping to reach a point where I can't remember many of their names because the company has the size has to grow. But with that being said, jokes apart, we should be remembering all their names. But yeah, these are the companies, and all of them are listed on a portfolio page. And we are very, very excited about how this story is going to pan out for all of them, because we fundamentally believe that um, there is so much opportunity in India, that each sector has a lot of potential, and therefore we continue to stay sector agnostic, while looking at asset light models, but very, very sector agnostic.
Absolutely. I'll try and link your portfolio page below so that our listeners can go and
Sure.
check out the interesting companies that you've bagged. And moving on, recently you announced this shift from your standard deal size, which was, I believe, previously 75K for 7.5% company. Was it that? Something
So
like that, I believe.
25 lakhs, 25 lakhs for a
Okay,
future of
25 lakhs.
7%.
Okay,
For a
okay,
future of
7%. And
7%.
now yeah, and now the new deal that you're offering is 1.5 crore for 15% equity, right? And this
One
is in
one
iSafe
point
notes.
1.25 crores
Oh,
for a
two
future
five.
of
Okay,
15.
sorry,
Okay?
my bad.
And
Okay,
again, all of it through iSafe. We do not do equity rounds or a shareholder round.
right. Hmm. Yeah. So what's the thought behind this change? What made you increase the deal size and also the percentage equity that you're taking?
No, so as I said, right, we did 80 investments with 25 lakh checks, and we ourselves got a little more confident in terms of managing these companies and making these companies succeed. While these founders were amazing, right? So these founders actually made the companies succeed, particularly through the COVID crisis, right? And I think once we crossed that barrier, we realized that I think now the time has come where we can give them more capital, because we are seeing how they can utilize this money, and give them enough money so that they can grow. Because what happened with COVID was that uh, the funding cycles had elongated. Everybody was scared. All type of investors were scared that should I invest in new companies, or should I save my money for my existing portfolio, because God knows if they would require it or not, right? They will be able to raise money or not. And keeping that in mind, and because the whole world went through a new cycle, right? So we realized that we are going to continue on this mission of deploying in 100 companies. But God forbid, if such a situation like COVID comes up again, and how do you ensure that these companies, if they are able to, if they're not able to raise some capital for, let's say, 6 months, they should have enough capital. So hence the thought was, let's give them more capital, again standardize the process, and again we invest at one go, we don't invest in tranches. And that also kind of increases their ability to experiment more, right? So if it's a hardware technology, they're building a hardware product, right? They can utilize that capital more effectively in terms of creating more prototypes, right? And that was the reasoning behind it, right? We just felt that now the time has come, we can increase the check size. We still don't do follow-on investments, and the whole objective now is that can we now do 100 investments a year with this new check size.
Absolutely. Yeah, that's great. And like also talking about the Indian startup ecosystem in general, right? Because this has been a focal point as well, like globally, not just in India. The world now sees India is the next big thing, right? And you are like basically backing at the very grassroots level, right? So how do you look at the Indian startup ecosystem? What are the most exciting sectors for you personally, where you think the next maybe $1 billion company will be coming up?
So Prashant, to be very honest, I think there is no better time than 2023. It is India's time, right? And I think globally also we've seen a lot of international funds come in and invest in the Indian ecosystem. So there are 2 3 points to it. One, the ability to drive more value out of Indian companies is just too high, right? Because we have a very large population which is now across China. First point. Second point is that this population, for the first time, has access to so much information. So the connectivity, thanks to UPI and cheap data, has brought this entire country together and facilitated digital innovation and transactions, right? which is point number two, which is a great point for any investor when he's looking at entering a geography, right? And the third is that this country is already in the second phase of your uh, evolution. The first phase was 2009 to 2016, and then 2016 onwards you had the government initiative of Fund of Funds, Startup India, Niti Aayog, and then advent of micro VCs and growth stage VCs coming, and the number of startups coming out, right? So now by 2023, you've got 102, 105 odd unicorns. You've had multiple companies go to IPO. You have a great supply of companies, second time entrepreneurs starting up, right? So there is no other country like India in this world, in my opinion, right? And hence, as a fund, we are also very clear in the type of companies we want to invest in. We only want to invest in Indian holding companies. We are not investing in Singapore. We're not investing in US. Not investing in any geography. This is an India-focused fund for India, for Bharat, right? And so I'm personally very, very excited. In fact, everyone at 100X, Sanjay, Ninad, Yagnesh, Vatsal, myself, we are firm believers that the story for the next decade or even the next century is in India. And we are more than happy to pull up our sleeves, pull up our trousers, dive into the mud to find the diamonds. More than happy, because this is where you'll find the bright stars and the diamonds.
Absolutely, and I totally agree with that. India, like, it has been a growing market for some time, and this probably right now is the time that it will break out from here and like propel into something even bigger, right? Great. And now moving on to a more thought-provoking question. So, what's something that you've learned now that you wish you had learned when maybe you were starting 100x VC?
Oh, I think we learned a lot of things during the process of creating 100x, and now till the time, I mean, till 2023, I think we've had massive learnings. And I don't think I have anything which I would say I wish I knew that before we started, because I we couldn't have known that COVID is going to come. But we managed our portfolios. We continued to deploy in companies during COVID. We didn't do 20 investments in a class. We did 9, 10 investments, but we continued, right? Um, so I think what we are trying to do in India, I think executing 100 investment thesis per year is a tall task, and I think there is no easy way or saying that I wish I knew how to do this. I think it's a game of execution, very much like the founders, right? It's a game of execution. So I think I would say that the only thing which I wish we knew before we started 100x is the amount of opportunity we have in India, right? And wish we could have started 3 years before that. So so hopefully we would have been 6 years into this. But nonetheless, never regret the past things. But we started now and we are investing heavily. But yeah, that's what I have to say on that.
Absolutely. And now moving on to our last main question before we move on to the rapid fire round.
Sure.
And this one is about what's maybe one problem that you feel still remains unsolved in early stage investing, or something that you feel needs improvement still.
No, I think I think we need to understand India's come a long way, and we are definitely much ahead compared to other countries, right? And as I said, it's a function of execution. I think the government is doing their execution role in terms of policies. Incubation centers and accelerators have come into existence. They're doing their bit, and there are a lot of funds which are doing. In fact, today the number of funds and the amount of capital which is there today to be invested is just phenomenal, right? So today, if you're an early stage founder, you've got access to incubation centers, accelerators, micro VCs, growth stage VCs, right? And then the government grants, right? This ecosystem has never been so vibrant. Uh, and also with the advent of funds like 100x, which is doing investments through iSAFE, which enables founders to raise money capital soon. Then micro VCs who are doing SHAs, and growth VCs which are doing SHAs, and then venture debt, right? So much is happening right now. I think uh, the the there is no problem in terms of early stage investing, right? I think the only thing which we need to look at collectively, and the onus is on the founder side, that it's a great time for India. Things have just conspired to have this one nodal point. India just happens to be in that after 100 years, right? So the only problem would be if we don't build businesses which can cater to such a large population. The domestic market in itself is so huge, right? And we've got everybody has the buying capacity, everybody is aspirational, everybody is generating income, even in tier 2, tier 3 cities, right? So the problem would be we have so much support system, but if you're not able to see quality deep tech companies coming out or quality brands being built out of India, then that would be an opportunity lost, right? Which I think will not happen, because I think founders are sincerely building out some amazing businesses, and hence I don't think 2023 has any problems right now. I think on the regulatory side, I would prefer that certain taxation issues are solved for the betterment of the founders and investors from the policy making side. But besides that, I think it's a great time uh, from an investment standpoint.
Great. So now let's do the rapid fire round, wherein
Sure,
I'll ask you five quick questions about the fund that you're investing through,
sure,
and you have to give five quick answers. All right.
sure.
So the first one goes: what are the sectors and regions that you're investing in?
Sure. So we only invest in India. We are very sector agnostic. We invest at both sides of the spectrum. Uh, D2C, consumer brands, all the way to deep technology, health tech, SaaS, so on and so forth. As long as you're building an asset light model out of India, we're more than happy to evaluate and invest.
What's the typical stage of investment?
So we don't want to invest in ideas if you just have an idea on a tissue paper, but if you build that idea from a tissue paper to a sample or a machine or a software, we'll be very happy. So we come in at a minimal viable product, proof of concept, early traction, right? And these are the stages we like to come in and invest.
Great. And what's the typical check size that you put in?
So we only have one check size, very standard, 1.25 crores, which is roughly around 160K USD, which we invest in our portfolio companies, irrespective of the stage. So you could be doing 10 lakh rupees per month, or you've just built a deep tech product which is just operational. We have zero clients. If we decide to invest in you, everybody will get 1.25 crores per company.
Great. Where can founders pitch or apply to the accelerator?
Sure. So we are very approachable. You can reach out to us on 100x.vc/class09, which is open. And once we close this, it will be 100x.vc/class010. All information is available on our website, 100x.vc. So feel free to log on to our website. They can subscribe to the monthly newsletter to know more about our initiatives, and keep going through our content, which has investment thesis on all our portfolio companies in terms of why we invested in those companies, um, and it gives us a perspective of what 100x thinks when they're investing in a company, whether it's a SaaS or a deep tech, and keep looking out for the announcements for our latest classes, so that you can apply. We've almost closed and on the verge of closing class 09, and we'll be soon announcing class 010. But if you are listening to this and you feel you have something great to showcase, log on to our website, 100x.vc/class09, and share your deck, and we'll be happy to schedule a call with these founders.
Absolutely. And the last one is where can our listeners follow you?
So I'm very accessible, very active on LinkedIn. So feel free to follow me over there, or Instagram, which is Shashank Randev underscore 100x. That's my handle. So feel free to follow me over there. I keep doing a few sessions and posting certain reels, which is around content for founders. So yeah, so these are two places which I'm very active at besides Twitter.
Great. I'll make sure to put all those links in the show notes below so that our listeners can get there easily. Thank you so much for making time for this, Shashank. It was great talking to you, and happy investing.
Thank you, Prashant, for having me. Really, really appreciate this, and look forward to meeting you sometime in person.
Absolutely. Thank you for coming on.
Take care.